AI might be the most important new computer technology ever. It's storming every industry and literally billions of dollars are being invested. So buckle up. The problem is that AI needs a lot of speed and processing power. So how do you compete without costs spiraling out of control? It's time to upgrade to the next generation of the cloud, Oracle Cloud Infrastructure, or OCI. OCI is a single platform for your infrastructure, database, application development, and AI needs. OCI has 4 to 8 times the bandwidth of other clouds, offers one consistent price instead of a variable regional pricing, and of course, nobody does data better than Oracle. So now you can train your AI models at twice the speed and less than half the cost of other clouds. If you want to do more and spend less like Uber, 8x8, and Databricks Mosaic, take a free test drive of OCI at oracle.com/automate. That's oracle.com/automate. oracle.com/automate.
Good afternoon. Let's do some business. We are doing it live right here and doing more at 4 weekday afternoons. We get right down to business with the news-driven hour right after Ben Shapiro. And just before the 790 KBC News Blitz with Randy Wang at 5, it's Mottek On Money live on the air here in 790 KBC, streaming live online worldwide at kbc.com and your on-demand Mottek On Money podcast, kbc.com, Apple iTunes, and all your favorite podcast platforms. Stocks kicking off the month of August. Happy August. Kicking things off sharply lower today after a round of economic news sparked new concerns about the economy might be slowing faster than expected. While the Federal Reserve maintains a restrictive monetary policy, they held the line on short-term interest rates just yesterday. Stocks initially opened higher today, partly because of Meta. On its quarterly earnings news topping expectations, the Facebook parent company issued an upbeat outlook for the third quarter, and Meta shares did end the day higher. But we did see a run of weaker than expected economic reports, getting part of the blame for a big sell-off today. The Dow was down more than 600 earlier. It came in for a closing loss of nearly 500 points, settling at 40,348. The S&P 500 down 76, and the Nasdaq slid 405 points. The bond market also saw some major moves. Yields on government debt plummeted today in a sign of the bond market's growing nervousness about the overall strength of the economy ahead of tomorrow's big jobs report. We call that the big enchilada of monthly economic reports. That's the monthly jobs report we get from the Labor Department. The yield on the 10-year note sank to 3.98%. Mortgage rates impacted by that, and mortgage rates dropped to the lowest level since early February this week after the Federal Reserve set the stage for a September interest rate cut. We did get the latest survey from mortgage giant Freddie Mac showing the average rate on the 30-year fix now at 6.73%, down from last week. Economists polled by the Wall Street Journal, by the way, expect tomorrow's jobs report to show 185,000 jobs created in the month of July, down from 206,000 in June, and the nation's unemployment rate is expected to remain unchanged at 4.1%. So let's see what happens tomorrow morning. Tough announcement at Intel today. Intel's chief executive putting it bluntly to his staff as he announced a $10 billion cost-cutting program that will decrease capital expenditures and cut the headcount at Intel by 15%. Intel, of course, a major tech bellwether. The job cuts come in the heels of a disappointing quarterly report and forecast for the iconic chip maker, which, by the way, was founded back in 1968 at the start of the PC revolution. Boeing shares taking a tumble today, a day after the company hired Robert Kelly Ortberg as its next chief executive, picking an aerospace veteran to steer Boeing through its manufacturing turbulence and a regulatory storm after posting another deep quarterly loss. Boeing naming the new CEO after reporting a core operating loss of $1.4 billion in the second quarter. Boeing also taking another loss on the CST-100 Starliner commercial crew program as Boeing works to prepare that spacecraft for its delayed return from the International Space Station. We see a Boeing stock plunging more than $12 today at $178 and change. Moderna, that big pharmaceutical company, tumbling 21% today after that biotech firm cut its sales guidance for this year. The price of oil back in focus, settling lower today on the downbeat economic reports, renewing concerns over the outlook for energy demand. This despite the situation in the Middle East heating up. Iran's leader ordering a direct strike on Israel in retaliation for what it said was the assassination of Hamas's top leader while in Iran, according to the New York Times. The Iranian leader giving the order at an emergency meeting of Iran's Supreme National Security Council on Wednesday morning, according to the New York Times. Israel says it's ready for any attacks. After the closing bell today, the earnings parade continued with Apple in the spotlight. Big news here, reporting revenue coming out better than expected. And Apple shares moving a bit higher in after-hours trading. Looks like the iPad business, by the way, was a star performer in the June quarter. Snap, based in Los Angeles, tumbling 17% in heavy volume. After hours after that company's second quarter revenue fell slightly short of analysts' expectations. And Amazon stock down as much as 6% in after-hours trading after Amazon reported third quarter sales guidance that missed analyst expectations. This day after a well-fed rally on Wall Street when we got that decision on from the Federal Reserve holding the line on short-term interest rates, signaling a possible rate cut in September. Now, as the latest drama in the presidential contest heats up between Republican nominee, former President Trump, and presumed Democratic nominee, Vice President Harris, tax policy a big issue. I'll talk about that later this hour with Mike Pallitz, Tax Policy Director at Americans for Tax Reform. Microsoft now confirming the latest cyber outage was caused by a cyber attack impacting Microsoft platforms this week. It turns out a Microsoft Azure outage this week was triggered by a distributed denial-of-service cyber attack. According to Microsoft, this as businesses continue to recover from the epic CrowdStrike fiasco a few weeks ago. Meanwhile, ransomware and email attacks are hitting businesses more than ever before. I'll talk about that later this hour with Howard Miller, the Chief Information Officer at the UCLA Anderson School of Management, who is also on the executive board of the IT group Innovate at UCLA. But first, on your money, the markets, and the economy, and the whole works now. Joining us live in studio, Money Manager Ken Winans, the CEO and Chief Investment Officer at Winans Investments, author of Investment Atlas 1 and 2, market historian, also Forbes magazine contributor. And big news here, starting Monday at 6 p.m., I'll be joining Ken Winans with a new show here, Winning with Winans on 790 KABC. Ken Winans, thank you very much for joining me here in the studio today.
My pleasure, Frank. And you know what? After hearing all you talked about, I want to go walk in a park and take a deep breath and say, at least the sun's out.
Grr out loud. Keep on trying, and you'll feel proud, according to Daniel Tiger, and my 7-year-old is listening right now. So, Ken Winans, it's wonderful to have you with us here. Yeah, a lot to unpack here on a day like this. Thursday, by the way, is usually the thickest of the news days, as you've probably noticed over the years, and a pretty thick day here today with this big sell-off. Give us your reaction to the big news here, first of all.
Frank, you hit the nail on the head. It was a lot of reports that came out that nothing was great. It was mediocre to somewhat bad news. The number one thing that caught my eye, though, was the backup in the bonds. A lot of not to get into a lot of weeds here, but Treasury bonds and auctions are done with primary dealers. There was a report out that they're having a big backup on their ability to sell paper to their customers. It means that the world is flush with Treasury debt. It might be hard to sell more of it. Then the other little piece of news that is really not caught is that it's the labor cost, the hiring cost for people, the hiring cost to maintain employees is going up. And so a lot of these companies, yes, they're getting pinched on both sides. The sales growth is not there, and their cost of operating is getting higher. It means less profit. And we've talked before about this earnings season particularly had to be priced for perfection to support those valuations. Clearly, many companies are not able to do it.
All right, the jobs report will be in focus tomorrow. That's something the Fed pays a lot of attention to, along with the inflation readings. And just ahead of that jobs report, Intel with that bombshell announcement laying off 15% of its workforce. And that's big news here.
Oh, that's huge. Because you have a major company. I mean, you think about chips. Now, maybe they don't do as much in AI as we've been talking about lately. But when you go through pretty much any electronic device that you have has an Intel chip in it, it's kind of sad. You look at these legendary companies like Intel and Boeing having the problems they're having, and you begin to wonder if the big, older, established companies are having this much trouble. What about some of the moderate-sized, mid-cap type companies when they'll start reporting more of their numbers? So, again, a lot of concern out there right now, and companies trying to gauge going into next year.
On the air live with Money Manager Ken Winans, and curiously, we see the price of oil pulling back despite the tensions in the Middle East on concerns about the economy once again, and also we're seeing these bond yields pull back on concerns about the economy, recession fears reemerging. What's your view of what's happening?
Well, on the oil, there was actually some pretty good news last week that the U.S. and Canada are working closer together on integrating energy policies. That's a positive for us. Canada's in the same boat we are. Canada wants to get their economy going. We have concerns about being too dependent on things in the Middle East and for that matter, any other geopolitical thing. So I don't think the supply of oil is that much of a problem. Other quick thing about oil, we are at basically on the downward slide of the energy push in the summertime for vacations. We're now going into the fall. There was a report out that natural gas prices are beginning to spike in Europe because of buildup for the winter. So you're having that transition with energy plays. In spite of what's going on in the geopolitical world, it's not a surprise. It's a very seasonal play.
All right, you're also watching cryptos. We speak to the biggest fans of crypto here, as well as the harshest critics. It looks like Bitcoin right now up 1,600. Back to 65,000. We've seen some pretty wide moves in Bitcoin lately. Ethereum is higher by $43 here to 3,208. And Doge, which I quote, is at 12 cents. So what about cryptos now?
Frank, on Doge. Let's start with Doge. Okay, a half a cent move, and you and I are going to go have dinner and celebrate, right? I mean, come on now. All right, look, the crypto situation is so interesting because it's added a whole other element. This trades 24 hours a day, 7 days a week. There's not another commodity in the world like it. So what you have going on right now is reading the gyrations going on in all of it. But the thing that's affecting, especially Ethereum right now, it's whatever the SEC is going to allow them to do with their ETFs. We're kind of on pins and needles waiting on that. But I think, the area of crypto that I'm the most interested in is stablecoin. When I talk to investors, this is what they want. They want stability. They like crypto, but they want to move more of their money into these other areas. I still think that's the big build out over the next 12 months.
All right, any prediction on where Bitcoin goes from here? We've heard these wild predictions after Bitcoin hit a record high a couple months ago, and Ethereum also had that big move ahead of those ETFs and all that. What kind of analysis are you looking at? And without getting hysterical, these wild predictions, where do you think Bitcoin goes from here?
The volatility doesn't really scare me, Frank. I'm an old commodity trader, so to see commodities swinging around like this, here's the thing. What really dampened the enthusiasm for Bitcoin was all the talk on halving the price. That really shook everybody up. They're saying, wait a minute, how do you have the price when Bitcoin has a 28 million coin cap? How do you do that? It was never really explained well to people. And then also, too, many people don't know this, but Bitcoin has a smaller variant called BitCash. People have been trying to play off those two quite a bit. I think that at this point in time, the problem is that Bitcoin has a lot of competition. There's more and more coins showing up, especially in the stablecoin area, and I see people diversifying out. But I'll say this, that I think that Bitcoin itself, the demand is there. People do seem to be buying the dips. I would expect that. But you know what? I'm just going to wait and see what happens with the new ETFs before I make any more predictions on what's going to happen there.
All right. After the bell, I should have also mentioned shares of Coinbase moved higher after hours after the cryptocurrency exchange reported second quarter sales that beat analysts' expectations. We see Coinbase had closed down about 5% today, but moving higher after hours. What about Coinbase and some of these other ancillary plays here? The miners, for example, anything that's catching your attention?
It's funny you bring up Coinbase. I've actually added it as a holding within my stock portfolios. The great thing about Coinbase is that where you and I just literally were talking about the various coins or tokens, Coinbase covers them all. It's an exchange. It allows people to, and I would also say, too, they're one of the few exchanges out there that actually has insurance against theft of coins. That's very promising for a lot of people. But no, I think it's a good stock. It would be the one play I would say conventional investors should look at.
All right, the Magnificent One, the one in AI, NVIDIA, down nearly 8 today, back to 109 and change. What about NVIDIA here?
Volatile. What else can you say about that play? Unfortunately, as NVIDIA moves, so does everything else in the AI space. I would just say this, that you've got to buy it on a dip. Do not chase that stock. You're going to be left out to dry if you try that. But Frank, real quick, going back on commodities, the one unkept secret about the AI play is silver. So for people who are looking for a non-AI way to play it, take a look at silver, which in my case, I would look at the SLV ETF as a second-hand way to play AI.
All right, and we have gold kissing record highs today. Got as high as 2,487 or so here, Ken, up about $7 here now. What about gold?
You know, it's not so much a U.S. play as it is a global play. I think that the trend towards central banks around the world increasing their gold deposits is not out of the realm of possibility, which means that the price of gold, I think, is going to go up. If I've been asked to make a prediction, I would be absolutely shocked if gold is not above $3,000 an ounce between now and next March.
If it gets that high, would you sell it?
You know, it depends on where we are at that point in time. It depends on the inflation. To me, gold is playing its role brilliantly as a hedge in value in an inflationary time. If inflation is still, cranking along at the current level, no, I wouldn't sell it at that time. But if you find that inflation's beginning to really taper, and by the way, Frank, globally, not just in the United States, it might be worth taking a look at it. Commodities are meant to be bought and sold, not bought and held.
Apple out with its earnings news. I don't know if you had a chance to take a closer look at that, but the stock had closed down nearly $4 at $2.18, moving up about $1.64 after hours to around $2.20. What about Apple on its news this afternoon?
You know, the thing that caught me the most about Apple is that everybody had been so focused about the new goggles and certainly any new iPhone. It's still amazing to me that people are, again, buying the laptops. They're buying the more conventional things, so they're upgrading their technology where areas that I don't even think Apple thought people were going to come back around to. But I do know that everybody I talk to, when you go to any Verizon, AT&T, T-Mobile store, you hear the same thing. We're waiting for the new phone. The new phone with AI capabilities is what everybody wants.
It looks like the iPad also selling quite well these days.
Yep, a big time.
What about Boeing having a rough time stock-wise today, down more than $12 at $178 and change. They're getting a new CEO, and then this drama playing out in space as we speak.
Oh, gosh. I mean, yeah, it's pretty interesting. We're having the drama in space with a brand new spacecraft. It is somewhat embarrassing because we take such national pride in our space program. To have our new spaceship stranded is not a good thing. I'll tell you what's good news about Boeing. They're bringing back an engineer to run the company. Not a business guy, an engineer. And for a long time, the engineers at Boeing had been complaining that too much had been taken out of the engineering core. Now it looks like they're going back to their roots. I think that's a positive. But as far as buying this stock, you better have the patience of Job if you want to buy it. It is not going to bounce back immediately, but it is a major aerospace contractor, a defense contractor. They have big government contracts. Boeing's not going to go out of business.
All right, before we let you off the hook here, Ken Winans, any specific places where you are putting money now and or taking it off the table?
The green on my screen today was in healthcare. And I think, again, if you're talking about inflation possibly continuing to run a more extended stretch, a lot of people do not have enough healthcare in their portfolio. Two of my old favorites, I would look at Eli Lilly, which posted good numbers. We'll also take a look at McKesson, the drug distribution company. Those are my two big positions that I have, and they're still doing very well, and they're still making lots of money.
Fantastic, Ken, and congratulations. Want to announce starting Monday, there will be a new show here on 790 KBC Monday evening at 6 p.m. It's called Winning with Winans with Ken Winans. Ken, it's going to be an honor to be on the air with you on Monday evening at 6 o'clock starting next week.
And, Frank, we promise a lot of new material.
Absolutely. We're going to have some fun with that. And, of course, you do a fantastic job, Ken, informing the audience here, so we will continue in this tradition. So thank you very much for this afternoon, and look forward to hearing you Monday evening at 6 o'clock right here on 790 KBC.
Take care, my friend.
Thank you very much. Money Manager Ken Winans live with us here. Mottek On Money, 790 KBC. 790 KBC welcomes Jim Brewer, Survival with Laughter Tour, coming to the Canyon at Agoura Hill September 8th. Tickets on sale now at AXS.com. Right now, caller 9 wins at 1-888-795-2222. You can get a pair of tickets to the show if you're caller 9. Call now, 1-888-795-2222. Tickets furnished by the Canyon, where music meets the soul. Down. The word of the day on Wall Street today. We actually got off to a higher start, but closed down nearly 500 points for the Dow Jones Industrial Average, down 495 at 40,348. The S&P 500 down 76 at 5,447. And the NASDAQ sliding 405 points, 17,194. The yield in the 10-year note is back below 4% for the first time since February, down to 3.98%. We did see a big move in the bond market today. Price of gold, meanwhile, kissing record highs, up another $7 right now at $2,487.80 an ounce, getting closer to $2,500. Silver up 16 cents at $28.64 an ounce. After the closing bell, the earnings parade continued. We see Apple shares pulling back today, nearly $4 at $2.18 and change, moving higher in after-hours trading on better-than-expected earnings news. Apple's up about $1.60 now to $2.20 and change. Taking a look at Boeing, among the casualties of the day, down more than $12 at $178.31. Intel taking a hit, down to $169 to $29.05 after hours. Taking a look at the price of oil, right now it's hovering just below $77 a barrel, moving slightly higher in after-hours trading here. Ford slipping into reverse again today after a rough week or so, having its biggest one-day loss since the financial crisis recently, down to 13 cents today to $10.69. Checking the cryptos now, see if we can bring up the latest here. We did see a big move. Bitcoin's up about 1,600 now, back to 65,000. Ethereum up 35 at 3,200, and Doge at 12 cents. Now the latest news for you here on 790 KABC. Mottek On Money continues here on 790 KABC. Rough day on Wall Street. Recapping the action today, the Dow at the close 495 points lower to 40,348. The S&P 500 down 76 at 5,447. And the NASDAQ down 405 points at 17,194. Looks like Boeing and Intel, big drags on the Dow Jones Industrial Average today, with Intel stock sliding on its latest earnings news, as well as the bombshell announcement that they're cutting their staff by 15%. Boeing taking a hit today, down more than $12 at $178 and change. This after Boeing announced a new CEO there to take over the company at a critical time, with a lot of issues facing the aerospace giant at the moment, including the situation with the Starliner commercial crew spacecraft, the company working to prepare the spacecraft for its delayed return from the International Space Station. Boeing naming the new CEO this week after reporting a core operating loss of $1.4 billion in the second quarter, more than triple the loss from a year ago. Boeing announcing Robert Kelly Ortberg, the former CEO of supplier Rockwell Collins, will be its new CEO effective August 8th, replacing retiring Boeing CEO Dave Calhoun, who's been under fire for the company's problems. Ortberg, by the way, ran one of Boeing's big suppliers, Rockwell Collins, until 2018, when it merged with another aerospace manufacturer and eventually ended up part of RTX. He built a reputation on Wall Street as a savvy deal maker. So Boeing about to be led by a new CEO. In fact, a week from today, hiring Robert Kelly Ortberg as Boeing's next chief executive, picking that aerospace veteran to steer Boeing through its manufacturing turbulence and a regulatory storm after posting another deep quarterly loss, as we've learned. So Boeing stock tumbling more than $12 today to $178 and change. Tomorrow we'll be getting the big enchilada of monthly economic reports, and that is the Labor Department's jobs report for the month of July. That'll be coming out first thing tomorrow morning. And analysts are expecting no change in the nation's unemployment rate, but we will see what happens first thing tomorrow morning. That report will be coming out an hour ahead of the opening bell on Wall Street tomorrow morning at 5:30. In the meantime, initial jobless claims at a one-year high as hiring slows. That was one of the reasons why we saw the sell-off on Wall Street, reigniting recession concerns. Yep, believe it or not, initial applications for unemployment benefits jumping to the highest level in almost a year, adding to evidence that the labor market is slowing. We've recently gotten reports of slowing job picture, as you've been hearing on this program from our various guests. And the latest news, of course, the number of Americans filing new applications for unemployment benefits increased to an 11-month high last week, suggesting some new softening in the job market, though claims tend to be volatile around this time of the year, we're told. Looks like the initial jobless claims that did increase, and this ahead of the big jobs report we'll be getting tomorrow morning, an increase of 14,000 from the previous week's unrevised level of 243,000. Looks like the Labor Department reporting that the advance figure for adjusted initial employment claims was 249,000 during the week ending Saturday, July 27th. So tomorrow morning we will be getting the jobs report for the month of July, and looks like economists polled by the Wall Street Journal expect tomorrow's non-farm payrolls report, as it's known, to show 185,000 jobs created for the month of July, down from 206,000 in June, and the unemployment rate is expected to hold steady at 4.1%. Big moves in the bond market lately. The yield in the 10-year note has finished at its lowest level since February 1st after the latest reports we got today, which also included, by the way, a weak manufacturing sector activity report for the month of July, as well as the weekly jobless claims that jumped to an almost one-year high. That weak manufacturing sector activity reading important for Southern California because Los Angeles is the largest manufacturing region in the United States by far. So the yield on the 10-year note is back down to 3.98%. That is big news because that impacts fixed-rate mortgage rates. So big news in real estate. Mortgage rates dropping to their lowest level since early February after the Federal Reserve set the stage for a September interest rate cut, as we heard yesterday from the Fed Chairman Jerome Powell at his news conference and statement on the economy. The average rate on the 30-year fixed-rate mortgage now down to 6.73%. That's down from 6.78% a week ago, according to the survey from Freddie Mac. A year ago, by the way, the average rate on a 30-year fix was 6.9%. The average rate for the 15-year fix now, 5.99%. That's down from 6.07 just a week ago. Of course, this latest survey coming a day after the Federal Reserve held interest rates steady, the short-term rates, at its July policy-setting meeting, but hinted that it's closer to cutting rates as it cited some further progress on inflation. Fed Chairman Jerome Powell telling reporters a September cut could be on the table. Of course, that news helped to propel the stock market higher today, but take that and rewind it back today with the Dow tumbling just about 500 points back to 40,348. Apple in the spotlight in after-hours trading. Today, Apple came out with its earnings news, so let's take a closer look at that now with Apple stock closing lower by nearly $4 at $218 and change and moving a bit higher in after-hours trading. Let's see if we can bring up the latest report on Apple. Looks like Apple beat its third-quarter expectations despite a decline in iPhone sales. Looks like iPad sales, though, doing quite well. Apple announcing its third-quarter earnings after the bell beating analysts' expectations on the top and bottom lines despite a year-over-year decline in iPhone sales. Yahoo Finance reporting Wall Street was closely watching Apple's performance in China, one of its most important markets, as the company has fought to regain market share from homegrown rivals, including Huawei in China, but fell short of expectations in China. Apple seeing revenue out of Greater China top out at $14.7 billion. We always get these eye-popping numbers out of Apple. Analysts surveyed by Bloomberg were expecting revenue of $15.2 billion. Apple reported China revenue of $15.7 billion in the same quarter last year. Looks like overall iPhone sales hit $39.2 billion versus expectations of $38.9 billion, falling short of the $39.6 billion Apple saw in the third quarter of last year. Despite the miss, Apple's CFO told Yahoo Finance today that the company's sales are generally improving in the region. And she also said Apple is seeing record upgrades in the country and that sales are better than in the first half of the year. So Apple taking a tumble during joining the parade lower during regular hours today and moving slightly higher up about $1.60 at $220 and change in after-hours trading. Shares of Apple still up nearly 20%. Year-to-date, despite a difficult start to the year, thanks in part to the impact of the company's Worldwide Developer Conference in May, where it showed off Apple's intelligence software, AI, coming to Apple in a big way, as we've heard. Looks like Mac revenue reached $7 billion, climbing above the $6.8 billion the segment saw last year. Wearable sales at Apple declined to $8 billion from the $8.2 billion Apple reported last year. Apple reported to be preparing to launch its highly anticipated Apple Intelligence software later this fall. That software, by the way, which is powered by Apple's generative AI technology, is set to hit iPhones, iPads, and Macs sometime in October. Stay tuned. Let's get the latest on your ride now here on 790 KABC. Mottek On Money continues here on 790 KABC. The world was rattled by that big IT failure in the last couple of weeks. CrowdStrike now being sued by its shareholders. after a faulty software update by that cybersecurity firm crashed more than 8 million computers and caused chaos around the world. The lawsuit accusing the company making false and misleading statements about its software testing. It also says the company's share price dropped 32% in the 12 days after the incident, causing a loss in market value of about $25 billion. CrowdStrike denies the allegations and says it will defend itself against the proposed class action lawsuit. Airlines were also impacted, especially Delta, which is losing millions of dollars as well. Meanwhile, Microsoft now confirms the latest cyber outage was caused by a cyber attack impacting Microsoft platforms. Turns out a Microsoft Azure outage this week was triggered by a distributed denial of service cyber attack, according to Microsoft. This as businesses continue to recover from the epic CrowdStrike fiasco a few weeks ago. Meanwhile, ransomware and email attacks are hitting businesses more than ever before. Let's bring in Howard Miller now, Chief Information Officer at the UCLA Anderson School of Management, who's also on the executive board of the IT group Innovate at UCLA. Howard Miller, thank you very much for coming to the line this afternoon.
You're welcome, Frank. Pleasure to be here as always.
Thank you very much, and certainly it was great having you on the air following that CrowdStrike situation a few weeks ago. What about the fallout from all of this since our last conversation, and where do things stand at this point?
Yeah, look, I think people are still trying to put together the pieces of the puzzle. Most of them are back up and running, as you mentioned in your opening there. I think Delta Airlines, probably more so than any other company globally, is probably the one that's been most impacted. I know some people personally, and other than them, I think business is back to usual. I think there's a mixed narrative on CrowdStrike. I think any of the other software vendors out there would tell you that this could happen to them, so go easy, and that human mistakes happen. But yet, as you said, there's always somebody who's looking to say, look, they made a mistake, it impacted our business, they should pay for it.
All right, so at this point, have all businesses gone through every single computer? Is that what it took to try to restore every single computer following that failed upgrade?
Yeah, that's correct. It's pretty much that, right? You had to figure out on every system that this had an impact, and then you had to go sort of system by system, server by server, to get things back online. And unfortunately, in the case of Delta, their footprint here was probably the most impacted.
All right. So certainly after this, people are rethinking what kind of system they have. I know Delta's CEO was quoted today, I believe. He asked, when was the last time you heard about a big outage at Apple? So what is the buzz there? And I know you do a fantastic job there at Innovate at UCLA with all of the biggest names in the IT world as part of that group. And you have those wonderful events where you all come together. What's the conversation among the IT pros here?
Look, I haven't heard of a mass exodus from Windows to Apple, but it's something that's on the table, and it's something for consideration, right? And the narrative has always been in our field that the Apple machines are more secure than Windows machines, and I'm not sure if that's really folklore narrative or if there's some element of truth to it. I think in many cases, Windows machines will sort of continue to rule the world, but it is an interesting premise to think what companies might do and if they would or wouldn't pivot to an Apple product because of this outage. I think that's a little too much of a knee-jerk reaction, but it is also something to consider.
On there live with Howard Miller, IT expert, Chief Information Officer at the UCLA Anderson School of Management, also on the executive board of Innovate at UCLA. Fast forward to today, we see that Microsoft confirms the latest cyber outage was caused by a cyber attack impacting Microsoft platforms. This one involving Microsoft Azure outage this week, triggered by some sort of a denial of service cyber attack. What do we need to know about that one?
Look, I think it heightens a couple of different things, right? The bad guys continue to be out there. The bad guys continue to look for ways to be disruptive and get into people's information. And in this case, again, there was a little bit of a human element as to what made the problem worse. So Microsoft had defenses in place for this type of attack, but maybe some problems in the way that they were set up to handle when the initial attack came in actually made the problem worse for them in this case.
Very interesting. In the meantime, we saw another report recently that showed ransomware and email attacks are hitting businesses more than ever before. Based on your experience and what you're hearing among the top people there, what's happening?
Entirely true. Look, I don't think ransomware has been a thing for the last several years and probably will continue to be a thing. And it's become a lot easier for the bad guys to just serve out the ransomware. And, it's pretty simple logic here, right? If you get one person to bite on the bait and you get them to pay the ransom, you continue to go look for more people to get the bait on the ransomware side of things. On just overall disruption, it's a variety of things. It's people with political causes. It's people who just don't like certain companies. But the bad guys are trying to disrupt, and they're trying to get into our ecosystems and wreak havoc for their own financial gain. So I don't think that the tactics are anything new. I think it's interesting that Microsoft highlighted that the outage was because of a problem, because companies tend to be more quiet about these kind of things. And I think after the CrowdStrike incident, they're being a little bit more forward to say, yes, this one was because of this particular type of attack. And it amplifies what we talked about with CrowdStrike as well. In the whole ecosystem of people, process, and technology, people are still a big component of it. And whether we like it or not, or whether we can fix it with technology or not, people still unfortunately do make mistakes.
All right, even the biggest companies vulnerable to all of this. What about ma and pa kettle out there who have their laptops or phones or whatever? What's your general advice to people as far as cybersecurity is concerned nowadays?
Yeah, I think we all have to have good cyber hygiene, from the mom and pop shops to you and me, Frank, right? I think we have to be vigilant. I think we have to pay attention. If something doesn't look right, it probably isn't right. I think you need to go and seek help when you get to that point where just something seems off, and you need to make sure you have your bases covered with basic endpoint detect and response and other malware things that you can use to just try and keep the bad guys at bay, right? It's just something we all have to be vigilant about.
Very important information as always, Howard. Thank you very much for taking the call on this, and I look forward to speaking with you as we continue to cover cybersecurity and everything that's been happening. Howard Miller, Chief Information Officer at the UCLA Anderson School of Management, also on the executive board of the IT group Innovate at UCLA, the top IT group here in Southern California. Thank you very much for joining us live here this afternoon.
Frank, thank you so much. My pleasure.
Thank you very much. And recapping the action today, a big slide on Wall Street. The Dow down nearly 500 at the closing bell. The S&P 500 down 76, and the NASDAQ down 405. Like the 405 freeway. Stay tuned now for the 790 KBC News Blitz. It's almost Yabba Dabba Doo time coming up here on Mottek On Money, 790 KBC.
Named one of the best personal finance podcasts, The Stacking Benjamin Show with Joe and his friends makes financial literacy fun.
We see money inefficiency, OG, around us all the time. We've got a few skeletons sitting out in the open, and maybe we need to broom them into the closet, if you know what I mean.
Nope, take that out.
What is...
Whatever you were going for didn't land right. Who's got a shovel and some lime?
Maybe you need to do that with your financial picture. I don't know.
Find out more by searching the Stacking Benjamins podcast, wherever you listen.